Today, a viewer asked me a question, and the question was, is this a short-term bounce or something more meaningful? And hopefully that was because the viewer bought when price nailed the trend factor down to and went a little below it, and for sure absolutely nailed the weekly uptrend line in purple from January 4th, 21 is where this is anchored at, and it absolutely nailed it the other day. And from the series of videos I've been making, the recent chart analysis updates video in particular, where we saw a bullish divergence in the global AD line and the all-country world index, which looks like is favoring the United States now. So maybe that person is asking that question to protect his buying down here. So let's take a look at what's going on currently here in the S&P 500 daily chart. And my first quick answer to the viewer was that price has to get above the top of the cloud and do that in a meaningful way to the upside. So top of the cloud 5097.39, price in the aftermarket hours at 8:29 p.m. Central Time on the 23rd is 5084. So it looks like there's a bit of trepidation in the overnight hours to push it above the cloud. First thing in the way is the conversion line at 5082.67. So it's right up against the conversion line in aftermarket hours. And if traders and investors can push it out of the cloud in earnest, the daily baseline is there to contend with, 5109.21, and then the ongoing supply line, 5108.28. And in the S&P 500 weekly chart, the conversion line for the weekly study is there too, 5109.21. So if S&P price can gap up on the open above this ongoing supply line, so tick higher and a gap up, 5108.28, higher than that, and then close above it, it could become qualified, and that means it would have blasted past the conversion line for the daily study, the conversion line for the weekly, and the daily baseline. So if it can qualify this ongoing supply line that way, that would be a show of strength. And then, yes, we're probably headed up in earnest. And it's not just a short-term bounce and then head back down again. Price can also gap up slightly tomorrow morning at the open and not get above the supply line on the gap up for the open, but then subsequently close above this line, 5108.28, end of day, and it will be qualified that way. And a lot of this bounce the last couple of days is the relief in the geopolitical theater, where Iran did not nuke Israel, and that's a good thing, and even better because they don't have the capabilities. And if they did, they would have, so they don't have a nuclear bomb to throw yet. So by them not retaliating immediately like that, that kind of relieved the pressure a bit there. However, if something happens overnight before the open, and during the open hours, price ticks lower than 4950.65, and then turns around and closes above the the ongoing supply line here closes above that end of day, and it becomes qualified that way. And either way, a show of strength. So let's talk about more good things that are happening. There was a price flip to the sell setup count 1 for combo and sequential, and that negated the buy setup 8 count. So it was 1 count away from possibly printing a buy setup 9 count. And if that 9 buy setup end count did print, that would have put a buy TDST at this high, 5211.78. So there would have been a major resistance line there. And this is the high for tomorrow to exceed, to print the D wave up wave B. The A has printed in, it is on D wave up wave B, but it won't print until it gets higher than this high over here on the 11th. So anytime we lose a buy setup count that high, that's a good thing. And now there's a price flip, so let's see if we can go for a royal flush the other way, all the way up to 9 and beyond. And reasons to be cheerful, part 2, would be this ATM exhaustion alert up printing, and it's actually started heading up. And a long-term oversold P alert down printed here, 4953.56. right by this ongoing demand line that I forgot to mention. So that demand line is at 4954.11. And don't forget, right below that is 4950.65 if there's a turnaround, and then head back up to qualify this supply line. So this is in the way of that. 4954.11, and this long-term oversold P alert down is a contrarian indicator, and DeMark Analytics in their infinite wisdom took the contrarian indication away. So that's concerning the pressure alert here. You can see the pressure here back on the 8th. So that used to be named ATM pressure down, and the one down here, when it's down here, is ATM pressure up. So when you get a long-term oversold P alert down here, that means it's going to go to the down pressure, which is up here. So that's an indication of it wants to get back up, and the pressure is on the floor down here. And I had to expand the ATM trigger so that we can see the pressure as it hit -2. So it's on the floor where it says weak bar down, this yellowish line here, that's the pressure. So it's still on the floor. The ATM slow trigger, however, has pointed up, and the fast trigger is leading the way back above oversold 25. I'll zoom it back out a bit. And I really don't like what they've done to the pressure indicator in this ATM trigger. However, we'll live with it. So if these two, fast and slow, can get above oversold 25, that would be a show of strength, and by that time price would already have been past this ongoing supply line and heading up. And another way to think of this contrarian ATM trigger indicator is there's only one place for it to go, because all three are down in the basement, and that place is down. Down meaning back up here. So with all three of them in the basement like that and the fast and slow starting to make a move up, I'm sure the pressure would follow if they can make it above this 25. And reason to be cheerful part 3 is that the daily S&P 500 AD line at 111.24.80 has surpassed the 21 EMA, which is at 111.07.16. So the AD line is above its signal line. And you can see that on the big board tomorrow morning. I took the red flag away from the AD line and 21 EMA on the big board. And it looks like the S&P 500 stocks above their 20 simple moving average really hit the depths of despair down here, went right down to the bottom of that red zone and just bounced right off of there. So let's see if it can get above the 50 equilibrium line and then start heading up into this green zone. And reason to be cheerful part 4, the New York common stock only advanced decline volume ratio, the EMA 19 went above the EMA 39. So you can see that here, and it happened above 0. So reason to be cheerful part 4 there. And reason to be cheerful part 5, the traditional New York McClellan breadth oscillator went above 0. Look at that, it really hit the skids here down to negative 300 and had a Marty McFly moment and is now above 0. So that's a reason to be cheerful part 5. So you can see that that's not a simple question to answer when someone asks, is this just a short-term bounce or something more meaningful? So those are just some of the things I go through to get a better idea of that. And trust me, there are many more things I look at to seek corroboration with the bullish thesis that we just looked at.